Hello, everyone. Thanks for joining Joint Custody. I'm your host, Ben Duve, Global Head of Partnership at GK8 by Galaxy, and I'm joined by Alex from DWS with a very cool title. Alex, maybe you give us a little introduction of yourself before I ask the first question.
Yes, so thanks, Ben, for having me. Yeah, I'm Alex Bechtel. I'm the Global Head of Digital Products and Solutions at DWS. DWS is the biggest asset manager in Germany. It's close to Deutsche Bank, so we are 80% owned by Deutsche Bank, a pretty broad range of business that we do across all asset classes. I myself have a background in digital assets. This is probably why I'm allowed to speak here today. But today I still do digital assets, but I also do other things. And maybe we have a chance to talk about digital assets, but also digital a bit more broadly today. So looking forward to it, Ben.
Yes, well, thanks for joining. And then the first question for me always is, how did you get into digital assets, right? Because I think that's the interesting first one, and I think then we might have to pivot because you made it out, basically.
So that's actually a long time ago. So I'm not sure if you want to hear the official story or the true story. You need to let me know.
The true one for sure.
The true one, yeah, I thought that you would say that. So the true story is and that was in the, let's say around between 2006 and 2010, 11, 12, I was kind of a semi-professional poker player. And something that was very important for poker players back then was that you can easily move around money between different poker platforms. And there were all kinds of payment services that were used back then by poker players, usually not banking rails. So when Bitcoin came up in 2009, 2010, it made it quite quickly into, let's say, the poker community because, hey, there's a new digital internet native means of payment. Maybe we can use it for kind of moving our funds around. And this is why I was exposed to that topic quite early. I think it was 2011. Since I was also very interested in monetary theory and money in general, that was, of course, a perfect match. So that's how I came into the topic. Of course, it took me probably 3, 4, 5 years until I really understood it. But the first exposure was indeed because I was a poker player.
I heard the story from another German guy who played, and that's all Unity, right? So there was also a story. I came through gaming
True, yeah.
into that storyline. But either you're a bad poker player or you sold off very early on for minimal gains because we still sit here and discuss, and you still have to work for a living, right?
That's true. And I mean, I was, of course, coming at this topic from an economic financial point of view. And back then at university, I traded Bitcoin with my friends when the price was in the low hundreds. And of course, we felt like the kings when we made 100, 200%. Of course, now looking back, we should probably not have sold. And the only people who still hold their Bitcoins from back then are always the techies, right? And not the business guys, because all business guys sold. And I'm unfortunately part of that business category.
That's very unfortunate, but well, on the other hand, it's good for us because we have you here and can discuss, and good for DWS. And let's focus a little bit because we touched upon it before. Your digital assets, so you have that private piece. How did you manage to get it into your real work environment or as part of your job?
Yeah. So I try to rush you quickly through these 10
Yeah.
years in between 2011 and 2020 when I started at Deutsche Bank and then later at DWS. So as I said, it took me a couple of years until I really understood the topic. I then did a PhD. It kind of played a role during my PhD, that topic. I spent some time at the ECB, which was in 17, 18, so pre all that CBDC era. So there were like 2.5 people at the ECB interested in that topic at that time. And then I started a podcast on that topic in 2019. And that was one reason why I got a call from Deutsche Bank at one point in time, basically asking me if I could help them build up their digital asset team. And that was in 2020. So I joined Deutsche in 2020 as, I would say employee number one on digital assets, which was on the one hand great because I had all the freedom to work on a strategy, build up a team. On the other hand, it was, of course, also a lot of, let's say, uphill battles, a lot of teaching, education that needed to be done. But that was a great journey for a couple of years. I worked on digital assets exclusively, built up a team there. And I worked back then for Stefan Hoops, who was the head of the corporate bank at Deutsche Bank. And Stefan then became the CEO of DWS, of the asset manager. And this is then when I moved to DWS and took a bit of a broader role, which is still includes digital assets, but also contains other topics.
Yeah, it sounds a little bit like you almost left it behind. I mean, in your day-to-day job, um, let's take out the emotional part where you're most attached to, but let's say where you attribute your workday, and maybe also give us a little bit of insights how digital assets and digital overall in an organization like DWS is viewed and what it really means. Maybe we can you can share some insights that we all know deep in your heart it's all digital assets and crypto. But I mean, if we go beyond that, how would you categorize it? Because I think it's a very interesting journey, right? From that smaller piece, which is more forward-looking, to really implementing and looking at the broader digital piece of such a large asset manager.
Yeah, and indeed, when I joined DWS, it was still quite a lot of digital assets. I would say 70, 80%. And now over the last couple of years, it became less and less because more and more other digital topics were added to let's say, my scope. So the way our team works is we actually build up a separate vertical, a digital vertical next to our other asset classes that we take care of as an asset manager, which are active, passive. Our brand is called X Trackers here in passive and alternatives. So we have that new digital vertical, but the way we work is actually not necessarily only vertically, but of course, digital always means horizontally. So a big part of our job is to work together with those other asset classes, with those other teams, and think about digital innovation. And that includes digital asset in the sense of crypto, blockchain-based innovation, but also other topics. And just to give you one or two examples of stuff that we did in particular on the digital asset side that fall into that horizontal bucket would be we were working together with our X Trackers passive colleagues, and we co-developed crypto ETCs, so a Bitcoin and an Ethereum ETC, where basically our team and the traditional X Trackers team were working together. And then next to that horizontal kind of work where we collaborate a lot with others, there's also a vertical kind of work where we really build up completely new business, which also, again, digital asset, but also non-digital asset related work. So for digital assets, an example would be stablecoin. So we started a stablecoin joint venture, which is something that does not really fit perfectly, at least into existing asset management business. So that
So,
was kind of new.
well, you're a supplier, right? Because there's reserve
Indeed.
management. In theory, you're a supplier or a vendor into a stable coin.
And that's, by the way, how it started. So our approach was not let's become a stablecoin issuer, but our approach was, hey, if now stablecoins become a thing, and that was 2020, 2021, which role could we play as an asset manager? And of course, it was first and foremost the reserve management. But then we were thinking like, okay, reserve management of a stablecoin, that's pretty basic money market business. There are probably 20 to 30 other asset managers in Europe who can do exactly that. So if we want to kind of increase our footprint in the digital world, we probably have to do more than that. And this is when we decided to actually take at least a part of that issuance role as well, and not only do that reserve management.
And then the Journey Galaxy also happily joined and GK'd as well.
Yes, so we were actually meeting, so I can maybe tell a bit how that came about because it was quite interesting. So the whole Galaxy leadership team basically flew to Frankfurt, and we were meeting at the top floor, DWS top floor.
Which is
Basically
a nice
had
building. People don't know. It's a very nice new building.
exactly had a conversation, and then we went having dinner together afterwards, and that basically sealed the collaboration. At first, the collaboration was only on the crypto ETCs, but then basically we became very close partners, and are
So you
since then
mean
doing.
towards the end of the dinner with more and more wine?
Towards the end of the dinner, but also in the weeks and months afterwards. Actually, Galaxy wanted to do tokenization first, and it was DWS who wanted to do a stable coin. So luckily, DWS won that argument, and then we decided to do a stable coin as a second product together.
Yeah, it sounds. I think it's a very interesting journey. Now, you have a good overview, and let's maybe pivot partly. Let's see, you see certain trends in digital assets, but you see overall digital trends, right? And because we started horizontal verticals, I think we got a little carried away. Maybe we use that to pivot back a little bit into how you work digital versus digital assets or
Hmm.
together with digital assets. And maybe then also maybe focus that on trends, right? So we all know stable coins. We all know money market funds, right? With someone like you has such a broad perspective into an asset manager and also it's such a forward-looking through academia. You write, I think, a column for one of the or the most renowned German newspaper on digital assets, but you also have that digital view with direct access also to the CEO, which also gives it's a different vantage points. Where are those trends? Where does digital assets play a role? But what are more digital trends people maybe should be aware of and is worth a discussion?
Yeah. So I won't try to marry the different kind of sub teams or teams I have because they're actually quite different. And I will not try to spin a narrative that feels like, okay, digital assets fits perfectly into other digital things we do because that's just not true. Right?
And
So
that's why I asked, right? That's the interesting bit. You have such
yeah,
a good perspective on that not
yeah,
everything is digital assets,
yeah,
but
correct. And actually, when you look at our P&L and the P&L of any asset manager, digital assets doesn't even take place, right? In particular of the big ones. Even BlackRock, which has now, of course, the fund is a huge success. It doesn't move the needle for them from a P&L perspective, and it's definitely true for us. So that's really more. It's cool that we are able to build stuff, and that's what we do. And I would say the digital asset part, I would distinguish two different things. One is we have crypto as a new asset class. And we, as DWS, but also other asset managers, decided to provide our clients access to that asset class through a wrapper, right? What asset managers usually do is they put a wrapper around products
yes,
and make it available. And that's
that's the
what's
job, right?
happening. Yeah.
That's the job description more or less.
What's happening with Bitcoin, with Ethereum, and potentially in the future, other products, maybe even actively managed crypto products. But
Oh,
that's
that's interesting. Yes.
all that bucket of let's give our clients access to crypto as a new asset class. And then there is this other bucket, which you could call tokenization, which is not about giving anyone access to a new asset class, but which is more about giving access to an existing asset class, but through different rails and maybe hopefully more efficient rails. And that's for me kind of the long-term game that we are all trying to win at the moment, but which is way, way more long-term than the crypto. If you look at the market caps of the crypto market today, it's a bit more than 2 trillion, I believe. When you look at tokenized money and tokenized assets, I mean, stable coins are around 300 billion, tokenized assets 30 billion. So way to go, I would say. But nevertheless, asset managers are, of course, also very focused on that efficiency, value chain, giving access to tokenized assets part.
And I think the thing people forget is there's no other asset you can build the rails with, right? So you need that if you want to internally build something. I assume the only asset that exists right now is crypto, even if you would prefer to do the big digital assets bits, they just don't exist yet. So if you want to
Yeah,
build, crypto
yeah.
is actually the only small revenue case, but also the only existing asset class you can actually start to build with, right? But and
And that's
then
not, I mean, that sounds totally logical, but that's extremely difficult to sell in a traditional financial institution. I
yes,
mean, asset
yes,
management is already a little bit easier than banks, but telling kind of the CEO of a bank that if he or she wants to earn money with digital assets, it's crypto and only crypto, and the rest maybe in 5+ years. Uh, Usually everyone nevertheless pivots to, okay, then let's wait 5 years and do tokenized assets instead of crypto because crypto is like,
yes. It's a
um,
tricky one, true.
yeah.
But I cut you off there for the second part.
No worries. And then the second part, I mean, that's a huge area that, of course, includes all kinds of. I could now name all the buzzwords like AI and quantum computing and whatnot. I would boil it down, and that's now in particular what happens in our team, is a topic that we call, or if I had to phrase a headline, it would be from products to solutions, because something we see in the asset management industry is that the fund wrapper, traditional asset management products, they come under quite some pressure because people are less and less interested in funds as a product because a fund is a very static and standardized product. While what clients want and what clients need is They want stuff to be digital. They want it to be individualized. They want it to be contextualized. They want it to be embedded into whichever ecosystem they're already in. And that's something a fund cannot deliver. And this is why a lot of what we do, but also other asset managers do, is think about solutions. So instead of having an ETF on the MSCI World, which will always be an ETF on the MSCI World, maybe you can think about solutions that cater to your specific needs and your specific life circumstances, because you have other investment needs when you graduate versus marry versus retire, right? And no fund product can deliver or cater to those needs. So solutions are basically, I would say, there can still be funds underneath those solutions, but there's another layer on top of it that you try to, let's say that's investment intelligence that you try to build in a way that you can address individual client needs. And that's a very big area I'm focusing on, and next to digital
Does
assets.
it mean a bot, or does it mean a evolving solution, or can my open claw talk to a DWS interface who says, hey, give me all the parameters and then I give you the best investment scenario and then please have a review?
Theoretically, it can be any of those, and I left it open deliberately, but I'm happy to make one or two examples to make it a bit more
Yes.
tangible. So one part of it is indeed a bit of a revival of robo advisory. We wouldn't, and with me, I mean the industry will not call it robo advisory, and it will also be
That
better than
didn't
robo
work out for
advisory.
some reason, so it has
Yeah,
to be called
exactly.
different.
Yeah. But it could be indeed investment intelligence in the sense that, for instance, a life cycle model that helps you allocate perfectly across your whole life and then prepare yourself for pension. So you usually have an accumulation phase where you invest, and then when you retire, you have a decumulation phase where you divest, and there is a lot of intelligence potentially behind that. And we, for instance, have built an engine that helps you do that. So that would
So
be one
basically
example.
avoiding the selling at the wrong moment in time because I start with the wrong asset classes or have a wrong allocation going towards my payout period, basically, or
Exactly.
my
And it's a lot
accumulation.
about risk management. So how
Yes.
do I need to behave to, for instance, have at least a certain amount X at a certain point in time? That's one part of the intelligence behind. In the end, what happens is, of course, also a move from early days equity into fixed income later in life. But
Yes.
basically a bit more professionally than I would be able to do that on my own by just randomly saying, okay, now I decrease my weight and increase the weight in the other one, because there's a lot of modeling that happens in the background.
Right. And so those are, what is another trend? Maybe give us another one just to get more a feel of the overall digital world. Because right now I see everything you describe works better and more efficient with digital assets. So I'm still relieved that it's not completely out of the picture.
Yeah. So I mean, of course, AI is a huge trend, but can be applied more or less to anything. I believe AI is very often, people, of course, first think about AI as something that creates alpha, that takes investment decisions. The way I look at AI is more something that you use across your whole value chain in order to either increase efficiency or rather enable your portfolio advisors. Because I do not believe, let's be honest, we as DWS, I mean, we are a very big asset manager, but I do not believe that we will ever have the capabilities to build machine learning models that will outperform the models that are built by those hedge funds that hire the top 20 mathematicians from Harvard each year, right? So that's honestly not where we will be able to compete. So I believe that we will use AI rather, for instance, to build a companion for our portfolio managers, an AI companion whom you can talk to, who summarizes research for you, who also, when you take an investment decision, maybe talks to you and say, hey, look, you are about to invest into German equity. Usually at this point of the year in this economic cycle over the past 5 years, you underperformed when doing those buys.
An
Maybe
interesting
go
one,
back and
actually, yes.
reconsider that, right? So that's kind of how I think about where to
Test your
apply AI.
conviction, basically.
Test
Challenges
your
your
conviction.
conviction in an investment. It's an interesting one. So, okay, so I understand. So when you say these are things you look at digital, when we zoom out a little bit, right? Are there trends you're seeing that are not that much discussed, maybe a little bit further down the horizon? let's give you an example of what I think about. So when I look from my vantage point, an asset manager is somebody who helps me allocate assets,
Yeah.
right? And then the whole management, the fund wrapper, the management, all the admin that goes with it, from a digital assets perspective, might be not the value add like it is today, and an asset manager could bring to me. But actually, the curation, when you look at vaults, for example, in digital, could be one of them. But maybe there are other, and that's just the superficial trend because it's very obvious. I see for asset management, maybe from your vantage point, you see other things we haven't thought of yet and might be interesting to look at,
Yeah.
just also educationally.
No, I think the points you just mentioned fit very well into what I have mentioned earlier, that the traditional fund wrapper loses a bit its appeal. You have, for instance, just said that maybe things are more efficient with digital assets and when stuff is tokenized. So, I mean, what is a fund doing? Basically acquiring different kinds of assets, wrapping it into a portfolio, and then selling the whole bunch, right? What if those assets are tokenized? What if we talk about vaults and these kinds of things? Maybe it's way easier, more efficient, and cheaper to set up products that might not be called funds anymore, but have exactly the same work exactly the same way and deliver the same value add to end clients. And I think that's something where asset manager have to have a close eye on, because the core business is under threat, not only by digital assets, but also by other partners along the value chain grabbing more and more left and right a piece of the value chain that usually has been owned by asset managers. You see more and more co-branded products, for instance,
Yes.
where it's the asset manager plus a neobank, for instance, right? So that's all of those things eat into, of course, the margin of asset managers, which is why I go back to that solutions business. That's kind of a way to enlarge your footprint again in the value chain. And going back to tokenization, one thing that could be a solution would be that you basically offer your clients a way to do more or less direct indexing, that you say you don't need a fund wrapper. But I, for instance, have here now bringing in the digital assets again, I have a range of tokenized underlyings, tokenized equities. Here is your dashboard. You can pick and choose whatever you want to have in there. You can choose the weightings. You click on confirm or wrap, and then I have here your pool, your dedicated pool. It's not a traditional fund wrapper, but it's nevertheless one individualized portfolio for you that I kind of have helped you set up and manage for you directly for the end client.
And give me that advice you just mentioned, and an investment manager gets that. Be cautious. Why you're overweighting here? Does it? The more you know about me, the better advice you basically can then give me. It's an interesting proposition, right? When I look at those topics, right? You just mentioned it. That eats parts of what the banks do, right? Because you basically take a lot of the pieces you need help from or with today is then on chain or done by the asset, the digital asset or the chain itself, right? So you basically keep your premium in the value chain, or you make your revenue still continue investment advice and so on in the value chain, but for others it might shrink. So I think you do the same than the others do, basically, if I
Exactly.
get you correctly, right?
Exactly. That how the game that's how the game works. I believe I mean what we are not doing as DWS, we are not directly selling our products to end clients, which means we always need an intermediary in between who helps us do that. And that can be fully digital, but that's kind of our collaboration model. So we are not directly attacking banks with any of the things I've just mentioned. What we would rather do is
80%
create
owned by a bank, so
that's also true. That's also true. But what we would do is our business model is B2B2C, which means that whole dashboard, maybe we can pull together tokenized assets. That's something we would build and offer to our distribution partners as a tool they could use, right? That's a solution we built and an investment intelligence behind it. And then we offer it as a tool that would be integrated into the front end of our distribution partner. So it's more co-opetition than competition with our distribution partner.
But it's interesting because the way you describe it, the solutioning, the digital solutioning is actually the competitive edge of DWS down the road, because that's how you win more corporation partners and larger distribution is by offering the better tools for people selling, right? I mean, if I can sell better and more because I get better technology provided on the back end, that's a competitive advantage your partners then have over others, right? I think very interesting.
100%. And I believe it will not, in the end, it will not be the tech. We will not win through the tech. The tech will also, for us, only be an enabler. In the end, it's always the investment intelligence that this is where our edge lies. But the tech enables us to make this investment intelligence available to end clients in a very smooth and efficient way. May that be on chain or maybe through APIs integrated into front ends of our distribution partners. But in the end, our core proposition will always remain kind of creating alpha or creating an investment edge versus others.
You almost answered the last question I always try to ask. How do you see the digital assets ecosystem 10, 15 years down the road? But maybe in with your or the way the discussion was, how do you see asset management and or digital assets 10, 15 years down the road? And since you're an academic and a contributor to a newspaper, maybe it doesn't only have to be the DWS perspective, but maybe also broader perspective you might have there. I mean,
Yeah.
I think it's an interesting. Very few people have these different vantage points to share.
Yeah. So I think we already talked quite a lot about trends in the asset management industry that maybe only touch on digital assets. So let me maybe go a little bit more back to digital assets for that final question. And it's definitely my own opinion because at least we at DWS don't plan 15 years ahead for our digital asset business. So the way we look at digital assets is in three verticals. It's the crypto vertical, the tokenized money vertical, and then the tokenized asset vertical. And I already talked about numbers, right? Crypto by far the biggest, 2,100 billion, stable coins, tokenized money, 300 billion, and tokenized assets relatively small, 30 billion. But the question is, of course, where could this go? And now everyone might have his or her own opinions where crypto might go, let's say in 10 to 15 years. Let's say it goes from 2.1 trillion, where it is today, to 21 trillion, right? A 10x could be. When we look at tokenized money and tokenized assets, the possibilities to grow are huge. So global money supply M2 is 110 trillion. Today we have 0.3 trillion in tokenized money. Global assets, and now assets really defined broadly, alternative assets included, is 1,500 trillion. So we are at 0.03 trillion tokenized assets, and your total addressable markets is 1,500 trillion. So for me, a big question is over the next 10 to 15 years, if and when this switch between crypto as a leader versus tokenized money and tokenized assets as a leader when it comes to market cap, when and if that happens. I believe, and I'm sure, Ben, you have also been a bit more optimistic 5 or 6 years ago than we maybe are today, because things have taken way longer than we all expected. And I do believe it will still take longer than we expect, because we are talking about infrastructure here. And building infrastructure always, you're talking about decades and not necessarily years. So I do not believe we will end up in the tokenized economy in 10 to 15 years, but I believe there will be a significant part of those assets will be tokenized. And I do believe that stable coins and tokenized assets have passed crypto in 10 to 15 years. I believe that a bit of that will sit on an infrastructure that will be provided by the central bank, and which will be more like closed loop, banks and central bank. And another bit will sit on public permissionless blockchain. So it will be a bit of a bipolar world. And I believe we need more than 10 to 15 years to marry those two worlds.
Yeah, I couldn't agree more. And I think yes, I think the reset of how quick the transition in the industry goes, I think is there, and I think the realization is there. I think the opportunities for it to accelerate really quickly comes from, imagine in the US, the DTCC just switches its underbelly. People forget it's just basically the internal plumbing into a more digital assets based one that immediately flips huge numbers, right? Or in Europe, if the central bank initiatives around Appia, for example, takes more hold, right? That could immediately and legacy assets are brought in, and that could immediately switch large numbers. But I agree with you. There's so much, and I think I always have the discussion, what do we do with the assets which have 10, 15, 20 years? I think the Austrians didn't they issue a bond that is 100 years.
Yeah.
So there's a whole other questions around these very long alternatives. You mentioned it. I mean, they have a very long tenor. How do we do? So I think there's all this also the discussion, how does the new and the old world then live in parallel? And then the cost reduction is very limited, right? If you have to run both systems. So that's, I think, super interesting. But I agree, 10, 15 years. Um, and I agree with the thesis, which I think is whole. That's one I've been discussing for many years. It's crypto now because that's the asset that works now, but it's just a very tiny bit. And in the long run, it's just how much of a percentage of the wallet is crypto versus traditional assets. But the traditional assets could all be digital assets. We just
Mm,
have to wait maybe a little bit for it.
yeah, absolutely.
So I think we're at time. Thank you so much for joining. I think we can have a whole nother discussion about all of the individual buckets, but I think it was a very good overview, and I think thank you also for sharing the broader insights also on the digital journey you are having. And thanks for the audience for joining, and hope for you to join also in future episodes. Thank you very much. Thank you, Alex.
Thanks for having me. Bye bye.